There would not be electric cars were it not for Elon Musk. I think we'll probably be an investor for another 10 years.
Tesla crossing over $1,000 a share, which is pretty remarkable when you consider that you own almost 6 million shares of Tesla for a valuation of about $6.1 billion.
And but most people, his friends, Elon's friends, told me they thought this is I shouldn't invest, and they thought that he wasn't focused on making profits short term, and I thought that was going to make it an unattractive investment. But the way we invest is that we're investing in businesses that are investing in themselves, that are penalizing current profits to become much larger businesses. That's what he was doing.
Hey, I'm Stephen, and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in today's video, we're hearing from big brain, big ball, big bank balance billionaire Ron Baron. Ron is a long-term Tesla bull. He's going to be dropping a ton of wisdom, and more importantly than that, as tends to be the case in the past, I've talked about this in previous videos on this channel, every time Ron Baron appears on CNBC or talks to the media, he seems to disclose information from private conversations, things that haven't been publicly discussed that later turn out to be dead on the money, and today's video is no exception. So if you own Tesla stock, make sure you stick around right to the end, because Ron Baron spills the beans with some new, incredibly insightful information about Tesla. And before we go any further, I once again want to say congratulations to all the Tesla stock hodlers out there. As we've seen, Tesla stock has broken through the $1,000 per share barrier this week and stayed over that level. Conveniently, $1,000 per share approximately equates to a $1 trillion market cap for Tesla as well. Now, I could pretend that I hate to be that guy, but let's be honest, I love to be that guy. Just want to remind you folks that about 2 weeks ago on the 16th of October, I posted a video entitled Tesla stock is about to awaken, a bit of a warning to investors who were waiting for Tesla stock to dip, and I laid out my reasoning and my catalyst as to why I personally thought the odds of Tesla stock continuing to rise from where we were today was relatively high. Tesla stock was at $843 per share when I posted that video, now well in excess of $1,000, close to a 25% rise as I record this. Now, despite the fact that I don't actually have a crystal ball and I'm not a time traveler, I was arrogant enough in that very video to say that I expected the video would age very well. Well, here we are, and yeah, you guys know how that panned out. Just keeping myself accountable, as I've said in the past. I make these predictions. I want you guys and girls to keep me accountable. I tell you guys, set a reminder, I made a prediction, come back, check in a year, 5 years, 10 years, etc. I'm not always going to be right, but I do want to always be accountable. And speaking of accountability, this is the reason why I've published my Tesla stock price targets over the next 10 years, bear case, base case, and bull case exclusively on my Patreon page. If you'd like to gain access, check the card in the corner. You'll gain access to my always up-to-date Tesla stock price targets, as well as almost 100 exclusive Q&As, a dozen or so exclusive videos, and more. My Tesla stock price targets also have probabilities assigned: the bear case a 10% chance, the base case a 45% chance, and the bull case a 45% chance as well. So in other words, I expect that somewhere between my base case and my bull case is the most likely outcome. And if anyone's wondering, Tesla stock still has a fair way to go before it even hits my base case for 2022. And we won't even discuss my bull case. But I will give you a hint. Hint, hint. I'm sure most of you folks know the drill by now. If you'd like your own Tesla stock to Mars merch, there's a link in the description. You can find shirts, mugs, and hoodies. I think the butt plugs are sold out, but practically everything else should still be in stock, so check out the link in the description if you'd like your own. And now that the plugging's done, get it plugging, because I'm not even... this is awkward. Let's get into the video. If you love crypto, stocks, and free stuff, or just want to help out the channel, check out these great offers. BlockFi are launching the world's first Bitcoin rewards credit card. People in the US can earn 1.5% Bitcoin back on every purchase with no annual fee using the BlockFi Bitcoin rewards credit card. Check out the link in the description. And for a limited time, you can get up to $250 in crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $300 just for opening an account. And if you make an initial deposit of $5 or more, you'll get a second free stock valued up to $2,000. Seriously. Free stocks? Yes, please. And finally, if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also linked in the description. Thanks so much for your support, guys. Let's get back to it.
So let's start with Tesla today, because you've been outperforming the markets pretty handily because of a lot of your investments, not the least of which is Tesla. Tesla crossing over $1,000 a share, which is pretty remarkable when you consider that you own almost 6 million shares of Tesla for a valuation of about $6.1 billion. And your cost average for that is $42.88. Let me say that again. It's now over $1,000 a share. Your cost average, $42.88. That's a remarkable gain.
So close to $42.69, if only. If that was the case, we would definitely be living in a simulation. Let me know in the comments below, what is your average price for Tesla stock? Mine is $149.92 as I record this, but given the fact that I'm still buying Tesla stock with every spare cent, this is obviously going to continue to go higher over time. And I also just want to provide a little bit of perspective. I personally think that in 10 years' time, having a cost basis of $10 per share, $100 per share, or $1,000 per share is going to look like the bargain of the century.
And it tells just about what a long time you have been such a bull and considered Tesla to be a great place to be. How long ago did you make that investment? When did you start?
2014 to 2016 when we invested. But that is sort of a normal type of investment, being a very long-term investment for us, being 7 years, 8 years so far. I think we'll probably be an investor for another 10 years, at least.
Interesting. Ron Big Brain Barron suggesting that he's going to continue to be an investor in Tesla stock for the next decade plus. Makes two of us, Ron. Let me know in the comments below. Are you also planning to hold Tesla stock till at least 2031?
Same with SpaceX. But to talk about the profits that we've generated, we now have $58.9 billion of assets under management, and we made our clients $54 billion of profits. In that $54 billion of profits is included about $6 billion from Tesla, from a $380 million investment 7 or 8 years ago. But it wasn't smooth. The business was continuing to increase, and the stock price gyrated fairly significantly in the first several years because they weren't very profitable. It's very, very hard to accomplish what they have, very hard. And in my lifetime, in the 1950s, there were maybe 50 car companies. They all failed. When I first met Elon 10 years ago, I thought I was very skeptical about whether it would be successful. And it's only after they started producing the Model S, we began to purchase stock. It took us 2 years to make that investment. Before we made the investment, we went to visit and spoke to him regularly. Probably followed it for 3 or 4 or 5 years before we ultimately invested. And most people were really skeptical. Roger Penske, we had investment in Penske Auto, the car dealership, and he bet me that he wanted to bet me a lot of money. I said, I can't take your money. But why don't we just play for dinner? And he said, you'll never make it, but I'll bet you dinner. He never paid the dinner. He owes me a dinner, but he hasn't paid it. But most people, his friends, Elon's friends, told me they thought this is I shouldn't invest, and they thought that he wasn't focused on making profits short term, and I thought that was going to make it an unattractive investment. But the way we invest is that we're investing in businesses that are investing in themselves, that are penalizing current profits to become much larger businesses. That's what he was doing.
This, ladies and gentlemen, is the difference between an investor who both has a brain and uses one, and an investor who either doesn't have a brain and or doesn't use one. Case in point, Ron Big Brain Barron actually engages his brain, looks at Tesla, the company, looks at their mission statement, their plan, understands how they're executing, goes, I see. They're investing aggressively in their business, in R&D, and driving their costs down and reaching higher volumes, and then they'll benefit from economies of scale. This company is going to be a money printer, but they're not trying to show a profit in the ultra short term to appease dopey shareholders. I love this opportunity. Meanwhile, you have the Tesla Q dum-dums who, instead of actually understanding what Tesla's doing, investing aggressively in growing and scaling the company and printing money in the future, take a cursory glance and decide that they're going to short the stock because Tesla can't make a profit. Tesla's losing money, and that's right, Tesla's going bankrupt. I cannot underscore this point enough. The people who legitimately thought that they'd done their homework on Tesla and actually believed that the company was, quote, unprofitable and could never make a profit and would go bankrupt, need to permanently disqualify themselves for ever making any further investment decisions in their lives, because they're clearly about 90 billion neurons short of a functional brain. But here's the thing. Most of these dum-dums already have permanently disqualified themselves from ever investing again because they lost all their money and currently live in their mum's basement. That being said, there is a subset of Tesla Q who, if I'm being honest, I genuinely believe suffer from mental illness, and I'm not making light of this, I genuinely believe this to be the case, who simply move the goalposts. Their thesis that Tesla was going bankrupt is now completely disproven and buried at 6 feet under. But that's okay, because now we've decided that Elon Musk is a fraud, or the competition is coming. These unfortunate souls seem so venomously attached to the idea that Tesla is a zero that I personally expect that every single one of them is going to stay short Tesla stock until they're no longer above ground.
And so he was able to show that the profits that he was earning, he was reinvesting to build new factories, to start new models, to do research, to build new batteries, to start all these other businesses. And as a result of that, there was great volatility in the profitability of his business initially, where he was spending more money he was taking in, and he was stretching himself. But ultimately, he now has a factory in Fremont, one in Reno. His one is going to open in Austin very shortly. He just opened one in China. These are massive factories. He's opening one in Germany. By the way, I brought a prop. So this is the Tesla Impact Report from 2020. And so all you have to do, it's 80 pages. I tell my friends, read this report. This is why you own Tesla. Read this report. And if you read the report, there's not any way you're ever going to sell it. So the first 30 or 40 or 50 pages are about the prospects for the business and the opportunities they have. And then it has 30 pages on ESG and how they treat people. So if you read that, you say, first of all, the first part is so clear about the opportunity, and it's so hard to accomplish what he has. And then when you read about how he's treating people and the social betterment he's creating for humanity, there would not be electric cars were it not for Elon Musk. In fact, you probably wouldn't be into space the way you are right now were it not for Elon Musk. So this guy is dedicating himself to making the planet and humanity able to survive. So it's really remarkable things that he's done. And people say all the time to me, they say all the time, well, how can you stand up against large automobile companies? How come they can't do this? Why are other companies unable, with all the massive distribution and manufacturing that they have, why can't they do what he's done? And the answer is pretty simple. You just reported last week that Herbert Diess, who is the chairman of Volkswagen, had a meeting of 200 executives of Volkswagen. And this is a week ago, and said he invited a special guest to address his 200 executives. And the special guest was Elon Musk. Elon Musk was invited by Herbert Diess to talk to the executives of Volkswagen. Why? Because he said that he was trying to pivot his business from making internal combustion engine cars to making electric cars. And he said, the hardest, toughest, fiercest competitor we have is Elon Musk. You have to learn from him.
The very fact that Herbert Diess invited Elon Musk to speak to around 200 VW executives really speaks volumes, not only about how desperate VW are to transition to electric vehicles and not go bankrupt in the process, but how highly Herbert Diess regards Elon Musk, his expertise, and his wisdom. And stay tuned, folks, because in a minute or two, Ron Barron is about to drop some absolute bombshells that seem to suggest that either he was present during this meeting, or he has a recording of the entire meeting, or more likely, someone from Tesla has personally briefed Ron Barron about exactly what was said and went down at this meeting. And I'm not exactly sure if Ron Barron is meant to be disclosing any of these details, but hey, it's too late now.
Ron, that does raise the question. I mean, you've made almost $6 billion on this investment. You say that you plan to be in it maybe another 10 years. How key is that investment? How key is Elon Musk to that investment? Would these companies, Tesla and SpaceX, which you also have a stake in, would these companies be the same without him?
Right now, they wouldn't. And so the risk that we have, the biggest risk I think we have, is his health. He works, incredibly hard. There's a picture on the internet when he's living in Boca Chica in Texas right now by SpaceX, which we're going to see next week. I haven't been there yet. And he's living in it must be like 500 square feet, and a little white picket fence around it, right on the factory grounds and the launch grounds. It's, you know, television, I'm sure, and well, I don't know if he has a television actually, but there's air conditioning, and there's a little kitchen and a bed, and that's it. And he sleeps 5 hours a day, and he works 19 hours a day. I mean, unbelievable what he's doing. And so I can't wait to see that. And I've seen pictures and everything and spoken about it, but I'm really excited about that. So short term, that's the risk. And you know, he's healthy, and I'm hopeful he stays healthy for a really long time. He's got big plans. He said he wants to die on Mars, not landing on Mars, but you know, after living there. But I think that he's healthy and working hard and brilliant guy and inspiring. Because of him, this is, with SpaceX, the two most popular companies for engineers when they graduate to work for. It is, you know, look up in these surveys, the most popular place to get a job is for in Tesla and SpaceX. They just had a recruitment day, an artificial intelligence day, a robot day, about a few weeks ago. And they said that, but it was really, you know, I watched it. Took an hour and a half watching it, 2 hours. I couldn't understand most of the things they were doing, and my wife comes in to the study. I had fallen asleep. I fell down and fallen asleep, and it was after about an hour. And she said, "You're watching this, and why are you in bed? What are you doing?" And so I was watching it. And but after that video, after that day, the amount of people who applied for jobs there were skyrocketed. When they have the Super Bowl ad and everyone advertises their electric cars or internal combustion cars but Elon doesn't advertise at all, the people who go to the website skyrocket. When he's on Saturday Night Live and other car companies advertise on Saturday Night Live, he doesn't advertise on Saturday Night Live, the people who go to the website skyrocket. Anyone who wants to buy an electric car looks at the other cars and then go to Tesla cars and say, I want to have a Tesla electric car.
This is a really powerful point from Ron Barron. Every time a competitor, using the term quite loosely there, advertises their own EV product, a consumer who's never really done their homework on Tesla will naturally learn about this product that they've just seen advertised. And if they're not an idiot, and let's be honest, many consumers are idiots, that's why advertising works, but if they're not an idiot, they'll then do some more homework and go, okay, well, let me compare that to this Tesla thing that I've heard of. Looks at the Tesla and goes, oh, wait, the performance is better, the specs are better, everything's better. Why would I buy this steaming pile of shit? I won't. I'm going to buy a Tesla. It's kind of crazy, but it's almost like Tesla has completely outsourced their advertising budget to competitors. Ford is paying to advertise Tesla. General Motors is paying to advertise Tesla. And now with this incredible Hertz deal, Tom Brady and Hertz are paying to advertise Tesla. And we've also heard news about the Hertz-Uber partnership. So now even Uber are paying to advertise Tesla. This is nuts. Oh, and by the way, let's not even talk about the army of fanboys and fangirls on YouTube, Twitter, etc., who are also inadvertently advertising for Tesla.
But anyway, to go to Herbert Diess. So what he said was that the problem that everyone has is supply chain. And the supply chain, they say that, you know, you can't get chips. So how come that other car companies reduced their production last year by 30%, and he's 100% higher than the trough last year? He's going to, you know, he's running at a rate of 800,000 or 900,000 cars a year right now. He's going to do 800,000 or 900,000 cars for last year, but he's running at a rate of over 1 million right now, and last year did 500,000, and he's on the way to 20 million. But how did he do that? How come he was able to keep producing and other people couldn't? Why? And that's what he's asking, Diess is asking Elon, why? How'd you do that?
Now, this is a really big insight. As far as I'm aware, no real details from this meeting have been leaked to date. Could have been anything. Hey, Elon, what do you think the future is? The adoption rates of EVs? How do you hire great engineers? No. One of the key questions that was asked is how in the actual did you manage to navigate this chip shortage when other automakers like ourselves are getting completely reamed?
And the way he did it is, first, I'm an engineer, he says, and I'm focused on supply chain. And what is unusual about this is that other people, he thought that the major suppliers, the tier 1 suppliers, would have this in their pockets. They've been around so long, they're incredibly profitable. And what happened is that when the COVID hit, all the car companies canceled their orders, or they scaled them way back. Elon increased his.
By the way, I just need to be that guy again for a moment in case you haven't been a long-term viewer of this channel and missed my videos in March, April and May of 2020. I literally predicted exactly this, saying that all of the legacy automotive manufacturers would be dramatically cutting back their orders from parts suppliers. Meanwhile, Tesla would increase their orders and take advantage of some of this additional supply, and it wouldn't end very well. And fast forward 12, 18 months, and that's exactly how things have played out.
So first of all, they know this is the guy we want to supply. And then what happens is that he didn't go just to the people who give him the chips, but the people who give him the chips, those people have contractors, and they have contractors, subcontractors below. He went all the way down. And so he figured out where the chips were, and whenever anything was short, and where he went, he found other people who had more.
Now this, no question, is the biggest and most important insight in the entire video. Anyone could have done this. Any automotive manufacturer could have gone far enough down the supply chain to arrange to get the additional supply they needed. However, only one company appears to have had the brains and the foresight to actually do this. And now we're seeing legacy automotive manufacturers get absolutely seeing profits down 20, 30, 40+%, deliveries down 30, 40+% as well. Why? They lacked the brain, they lacked the vision, they lacked foresight, and now they're paying the price. If you guys are regular viewers, you probably saw my video featuring Tesla co-founder JB Straubel recently, who said in an interview with Jason Calacanis on the This Week in Startups podcast that he doesn't believe that the legacy automotive manufacturers have, quote, done the math in terms of supply chain for building the electric vehicles that they're claiming that they're planning to build in the future. In short, Tesla was the only company with the foresight, the brains, the vision, the awareness to realize where EVs were heading, the pace of adoption, and have done everything they possibly can to lock in long-term materials contracts, supply contracts for parts, etc. Have done everything they possibly can to secure their future and scale as fast as possible. Meanwhile, literally every other automotive manufacturer on the planet right now is too dopey to have even secured supply chain. There is a cataclysmic train wreck just around the corner. Legacy automotive manufacturers probably don't even see it coming. To give you guys context, the world's biggest, largest automotive manufacturers by volume have seen their volumes collapse by double-digit percentages, 20, 30+%. Think about that. Why? Just because they couldn't get chips. Imagine what happens when they try to transition to EVs and switch from building 5, 7, 8, 10 million ICE vehicles per year to building the same volumes of electric vehicles. It's not just chips that they need for those electric vehicles, it's everything that goes in them. They're totally different technology to ICE vehicles. How do you think this plays out? They are all categorically fucked.
And then he has his staff of engineers, and what they talked about was how he was able to very quickly, with his engineers, redesign the chips. So he redesigns the chips and gives them to the people who had more chips to make them for him, and he just doesn't miss a beat. Yeah. So it was about being focused on supply chain. That's how we did it.
Ron Barron has seriously exposed a bombshell here. The fact that Elon Musk was brought into the Volkswagen meeting, and the key takeaway from Elon Musk was supply chain, you've got to secure supply chain, really tells us a lot about A, how naive and ignorant legacy automotive are, and B, the absolute train wreck that's just around the corner. At this point in time, Tesla has done and continues to do what they need to do. Volkswagen at least knows what they need to do, and the rest of legacy automotive doesn't even know what needs to happen. Boy, oh boy, are they in trouble. I guess the best way to sum this one up, legacy automotive are about to fall off a cliff, and they don't even see it coming. Meanwhile, Tesla will continue to head to Mars. And speaking of, don't forget, you can get your own Tesla Stock to Mars merch linked in the description. Hope you guys have enjoyed this video. Let me know in the comments below, are you a fan of Ron Barron? And also, of all the legacy automotive manufacturers, besides Volkswagen, who do you think will survive the decade? If anyone. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. And don't forget the BlockFi Bitcoin Rewards credit card, where you can earn 1.5% Bitcoin back on every purchase. There's a link in the description. You can also earn up to $250 in crypto bonuses when funding a new account on BlockFi, also linked below. And finally, don't forget your free stocks with WeBull and Stake, also linked in the description. These great offers also help out the channel. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.